Hey guys, welcome back to my channel, McNallie Money. Today we're going to be talking about a small cap Canadian company in the MJ space. With the incoming Biden administration, I think this is an area that's poised for big growth. There's currently a lot of opportunity, and here's a good example of one of those companies. Before we get into it, please hit the thumbs up and subscribe if you haven't already. And without further ado, let's talk about the Valens Company.
A lot of what we're going to be pulling today is actually from their Investor Day presentation. On a side note, I would highly recommend if you can get your hands on one of these for any of the companies that you are taking a look at. They're very, very helpful. Tons of information, tons of value in an easy to digest format. So we're going to be pulling a lot from that. However, I did want to go over some of the high level financials before we get into the presentation. So the Valens Company, obviously in the MJ space, this is one that I've personally held for the last few years and regrettably did get into a little bit early. For full disclosure, I have about 4,500 shares at an average cost of 313 Canadian. So fairly good size holding for my portfolio. Now, if you look over the last year, the company has ranged from about $1 to $3, and it has pulled back quite a bit here in the last maybe say year to 18 months. I've been holding through this entire time period and honestly feel like my money was tied up here, but I do feel the catalysts are now in place to get some good return on this stock, and that's why I wanted to talk about it today. So you can see a nice little jump here, just about a dollar upward movement. And that coincides directly with the Biden administration coming in. Obviously, they're pro MJ. Now, if we look down at the bottom here at earnings over the past few quarters, you can see they've fallen off considerably. We're going to talk about that. Basically related to their tolling versus white labeling versus in-house products, but I feel like that's a big reason for the pullback as well. They were humming along here about 30 million a quarter. Now they've pulled back and just under 20. But I wanted to give a high level view here. Here's the 1 year if you're interested, and then the 6 months, you can see that nice little run up from the low to mid 160s all the way up just north of 275 actually was the high. So if we jump into the actual investor presentation here, here's some of the key highlights over the last, I guess, year and a half. I wanted to point some of these out because there are a few in here that are pretty notable. We'll talk in more detail about most of these. So you can see here Q2 big financing deal, 43 million. So obviously that's great. We'll talk about how they've deployed some of that cash in a little bit here. Significant increase to processing capacity. Again, we'll look at that as they open their K2 facility. Source A technology, we're going to talk about as well. This is a very big opportunity with their Basecamp line of drinks. Rebrand to the Valens Company, launched the cannabis infused beverages in Ontario. So that is the Source A technology that we're talking about. And then most recently here, an Australian market entrance, which is great. Again, that opens up a lot of opportunity in the Pacific region. And then most recently Q3. The point I wanted to mention here is they've now got 56 SKUs, so it's by no means a very focused company in terms of one or two product lines. It's pretty diversified in terms of offerings. So if we get into it now, I'll take a look. Here is what I wanted to point out in terms of the Source A technology. So for those of you who aren't avid MJ users, there's a number of different ways to ingest or take this product. Drinks are obviously one of the most leisurely and if you think of an apple cider or beer or anything like that, pretty casual way to enjoy. So this Happy Apple brand is actually well known across the world, and they've got the rights to this in Canada. So they're going to be bringing this in, which is great. They've also got white labeling. So we talked about that prior to, I'm going to say, the last maybe 12 to 18 months. They were doing a lot of tolling. So essentially, they'd be buying MJ wholesale, extracting for other companies, and then selling the byproducts back. There was great margins on this, but obviously the end products were provided by those other companies. They do still offer white labeling, so we'll talk about some of the different products that they provide that for, but they've now started building their own in-house vape cartridges, drinks, stuff like that, which is really I think going to set them up for the future. So although it did have a little bit of a temporary impact to revenue, I think that's going to be a positive catalyst over the long term here. So when we start talking about some of these new products, here you can see vape cartridges, beverages, capsules, tinctures. These really are what they refer to as cannabis 2.0, and I think this is going to be where a lot of the revenue is driven in the years to come. The other point I wanted to mention here on this first slide is just the CEO. So you will notice he's a younger guy, Tyler Robson, based out of Kelowna, BC, Canada. I actually grew up out there. I went to university in Kelowna, and this guy's been around the block. He's been involved in the industry for some time, has a degree in agriculture, and although he's young, he seems to be executing on a pretty high level. So I do have faith in him, and I think he's the right guy to be steering the ship right now. So if we shift now more away from the products to the market or addressable market, this is Canadian, so keep that in mind. We've now obviously got the Biden administration coming in, and that's going to open up a massive opportunity south of the border in the United States. But I did want to show this just for comparison's sake. Canada is about a tenth the size of the United States or the population of California, but this gives you a good idea of the growth rates just in our country alone. So current market size, about 3 billion. You can see it's centered in the big four provinces there. By 2022, so 2 years, a year and a half now, they see that going up over north of 5 billion. And then obviously you extrapolate that out over the United States and you can see the TAM or total addressable market is huge. They talk about here that the percentage of users that are not interested in ingesting cannabis. So you can see here a lot of demand for those capsules, drinks, edibles, stuff like that. This breaks it down again between all the different product lines here. So you can see when I talk about how they're diversified into different areas, this is exactly what we're talking about. The next thing I wanted to mention here is specifically about the vapes, vape pens. So again, this is Canadian data, but it's worth noting they've right now got 6 out of the top 15 brands in Alberta. So they're responsible for producing these, and in many cases they're white labeled like we talked about. 4 of the top 20 in Ontario and 3 of the top 10 in British Columbia. So they do have that dominance. They are a leader in various provinces across Canada, and I think that's a trend that's going to continue as we talk about their K2 expansion, their greater GTA, so Toronto expansion, and then ultimately Australia and the Pacific region as well. So this slide really highlights the span of different products that they can produce here: concentrates, hash, pre-rolls, vapes, oils, edibles, beverages, drink drops, and topicals, creams, stuff like that. So again, when we talk about the different stages of MJ evolution, obviously the pre-rolls and the flower itself are kind of the base layer. Then we put in some of these extracted products, and then we get into the more kind of medical health wellness realm there. This talks a little bit about global expansion and international opportunity. So United States, Mexico, South America, EU, which they're certified in, and then Australia. Okay, so now on to some of the big catalysts here. So we've talked a little bit about the overall company strategy, some of their evolution. They've been around since 2012, so it has been definitely an evolving state. The Canadian rollout was a little slower than anticipated. The nice thing there is there has been a lot of pressure on the producers, which has actually brought the cost of the flower down, or the input cost for a lot of this stuff. So we talked about their capital raise. This is where a lot of that money has gone. So they're calling this the K2 facility. Like I said, they're based in Kelowna, so Kelowna 2. And this is actually an end-to-end production facility, so over 42,000 square feet. Again, it is certified GMP compliant, and this is where they can do everything in-house. So this dramatically expands their footprint. Here's another view of it here. This is the GTA facility. So this is going to be outside of Toronto. This is where they're going to be making their drinks and white labeling products, and another 30,000 square feet coming online. So between the two, they're actually going to be well over 70,000 square feet, and this makes them the number one by size third-party cannabis extractor in Canada, which is phenomenal. Again, because we're opening up a lot of new markets. I personally expect MJ to be legalized in the States within the next 2 years, and I think that's reflected in the run-up of their share price recently here. And the final thing I wanted to talk about is actually down at the bottom of the presentation. So one of the last things they talk about, and it's actually, you can see the amount of data in here is almost overwhelming. There's everything you could want to know. It goes into the Australian market. So they've actually partnered up with some companies in Australia, and right now it's mostly medical. But you can see here a few things that I wanted to point out. 2% of MJ, so just under 2% of MJ is domestically grown in Australia. I actually did part of my degree in Australia too, coincidentally. But they import a lot of this stuff, and they also import a lot of their topicals, their creams, their gels, their vape pens. So this is a big opportunity in itself. However, when you look down here, you can see that Australia actually has a lot of ties to the Pacific region. So up here you can see the NAFTA circle, United States, Canada. Obviously that allows Mexico expansion. But once you start getting into Australia, this really opens up a lot of trade opportunities with other countries. Now, a lot of these obviously aren't on pace to legalize MJ anytime soon, but it's nice that they're laying that groundwork now and they have that foresight. So for these reasons and a number of other ones we haven't gotten into today, I think this company is very well positioned. Like I said, I feel like I did get in a little bit early. I have been holding the bag on this one for probably about 2 years now. However, I feel like the wait is over, and I feel like the world is ready to put some money back into this sector and have some interest. So for those reasons, I think it's definitely worth a look, and hope you enjoy. Have a great day.